Wall Street digests earnings and awaits the Fed. Welcome to Market Insight. I'm Ludovica Brignola. While the Fed is not expected to make a move on interest rates, investors will be closely watching what Fed Chair Jerome Powell will say about the future of the interest rates policy. Meanwhile, Wall Street digests earnings with huge swings in the stock prices of the likes of PayPal, Tesla, and Alphabet, all as the market seems to be undergoing a rotation into smaller caps. Well, joining me now to talk about all that and more is Jack Janasiewicz, lead portfolio strategist at French bank Natixis. Welcome. Thank you very much for being with us today. Right, Jack, so you say you are expecting Jerome Powell to lay the groundwork for a September rate cut. And that's interesting, but what do you mean? And also, what kind of message do you expect him to deliver?
So I think at this point, the market's fairly consistent in terms of its expectations for rate hike or cuts, I should say. You're looking at the market pricing in almost 100% probability for a September cut, as well as another one in December. And the November cut, I think, is still a little bit greater than 50-50. But the point being here, when you start to look at the economic data, we continue to see downside surprises on inflation. So it's certainly, I think the Fed should be showing more confidence that we're getting to that 2% target. But the other side of the equation, the risk is to the labor side of their mandate. We're starting to see a little bit of softening, especially when you look at the unemployment rate. So those balance, I think, are shifting a little bit. And that, I think, is what you're going to hear from Powell when it comes to the FOMC meeting. And that's going to give them, I think, plenty of cover to continue to suggest that September is the right time to begin the rate cutting cycle.
Right, and speaking about earnings, so far we've had a rather disappointing earnings season in the US, I would say, or were they disappointing? And this week we have the big tech names such as Microsoft, Apple, and Amazon. What are you expecting there?
Sure, and I think you've fairly described it well. You know, the decent earnings. I've also heard a lot of comments where they've basically come out and said could have been worse. So again, I think the issue here is the bar coming into the earnings cycle. And historically, we have seen earnings estimates continuing to fall as we approach the actual earnings season. And then once we get into the actual earnings, you see them start to revise higher and sort of looking like a fishhook effect. We've seen a little bit less of that this time around, which implies that that bar might be a little bit higher coming in, which I think coming back to that big cap tech backdrop, that sets the bar a little bit higher. And so, you know, modest beats might be taken a little bit less, I think, optimistic than maybe I've seen in the past. And when we start talking about that big cap tech trade right now, maybe just modest upside surprises might not be enough to continue to see that tech trade working in here. So certainly all eyes in all directions are going to be on some of those numbers coming out on Wednesday, which are when some of the big cap tech names are coming to market here.
Absolutely, all eyes on that, but also on Friday, right? What are you expecting from Friday's jobs report? And most importantly, how do you think those numbers will affect the Fed's and the Fed's dual mandate, especially?
Yeah, Friday is going to be interesting because one, I would say we potentially could have a little bit of a skew because of the Hurricane Beryl numbers coming through. So keep that in mind. But you know, I think if you have basically something close to what the market's expecting, which is something around 170 to 180,000 job ads, that's basically in line. I think you're going to see enough of confidence that the economy is slowing, but not slow. So the job market's still okay, but not falling apart. And the two things that we're paying attention to when there are going to be basically average hourly earnings, making sure there's no significant blip or pickup in that number. And the other one's going to be the unemployment rate. And as we've gone back to when we were just talking about, the unemployment side of the mandate, I think, is what the Fed is now shifting its focus to. And so if we start to see continuing weakness on that jobs number and unemployment rate starts to drift higher, again, more cover for that Fed rate hike cycle or rate cut cycle to begin probably in September.
Interesting. And a question on market trends. And when it comes to equities, we've really seen growth underperforming. And you yourself said defensives and cyclicals rallying on the other hand. Why is this happening? But also, do you expect this trend to continue?
You know, all of this, I think, traded very differently once we had that CPI number that came out a couple of weeks back. And that was the first time we actually had a month-on-month negative print. And obviously, I think that really solidified the backdrop for that rate easing cycle that we're talking about. So the prospects for rates falling, additional rate cuts really kicking in, that triggered this massive shift in underlying sentiment here. And you saw it with, for example, the Japanese yen really starting to appreciate. So when we think about the sort of proverbial leverage trades, those carry trades, when you see things like Aussie dollar versus the yen reversing course sharply, yen rebounding, and you see the sell-off in currencies like Mex peso and Brazilian real, a lot of de-risking because we had a little bit of a vol tick up. But even more importantly now, a lot of those laggards started to catch back up because there's sort of the idea that potentially the Fed put might be back in play. Those rate cuts take a little pressure off those rate-sensitive segments of the marketplace, and maybe you're less inclined to have to maybe position yourself in large cap tech, which is largely considered a defensive name more recently. And that's why we're seeing the breadth widening out. So that inflation print, lower rates, the expectations for the rate cutting cycle to commence, put this vicious shift under the market, and hence why you're seeing value outperforming growth, small caps doing a lot better versus large caps, and the cyclical portions of the market really starting to pick up relative to growth.
Great analysis. Thank you very much, Jack Janasiewicz, lead portfolio strategist in Natixis. And this is your Market Insight. Don't forget you can watch more videos on Reuters.com.